Hello traders, this is Rich Dare from Tradesight. This is going to be the market preview for this coming session, which is going to be Thursday, April 4th, 2013. This is definitely going to be the most interesting preview of the year because we've got a number of things that are really starting to influence technicals and a lot of new developments that we're going to be talking about. So looking forward to this, and I hope you do too. The session today was one of clear distribution and some and one that actually did some technical damage, or potentially did some technical damage with a follow-through. The ES futures were down 16 on the day, and the NASDAQ futures were down about 26 on the day. We had very negative advanced declines. The put-call ratio and the VIX was also elevated on the session, and this all kind of blends into the stew of some new developments as far as the technical analysis goes. So let's move on to the major indexes for now and take a look at the charts of the futures. All right, here's a look at the ES futures. The ES futures had a very bearish candle, one of the most bearish candles so far this year, aside from this down day here earlier in March. But the notable point here is this is coming off of range high. We're in range high here. We basically are sweeping the previous highs the last couple of trading days, and we actually closed at or near the low, which really essentially makes for a first day down. We definitely had some broad-based selling today, as you'll see later, as far as the technicals go. The volume today was definitely higher than the previous session, which was an up candle, which marked a new high on the move. So today's down candle, as far as volume goes, outstripped the up candle, which is always a negative development. We're now down below the 10 EMA. Haven't qualified it with a follow through to the downside, but if we do so, then the 50 is going to be in play, and so that's something that we're going to be watching the next couple of sessions here. Here's a look at the NQ futures with a similar setup. We printed a new high on the move. The previous session, today's candle was very bearish to the downside, covered a lot of ground to the downside, closed below the 10 EMA. But note that we're still in this lateral trend, this lateral trading range, so we really haven't done any technical damage here as far as price goes until we leave this range to the downside, which would put us back down below the 50 DMA. Now, while the price action doesn't look that notable, what we're going to be talking about in a little bit here is going to be the effect of this day on the market internals. So let's take a look at some of the key market internals now. Alright, so one of our market internals here. Here's the SPX versus the TLT. This is our primary risk on, risk off metric. We've been riding this channel to the upside here. This is where we started to get a little bit too risk on, and where the market started to run out of steam. We had recently touched this as early as mid-March, and have started to turn back down. Key here is that we've now consolidated sideways here without really being able to recoup and break back to the upside here. And after this consolidation, rather than breaking to the upside here in a bullish formation, what we're doing now is we're potentially breaking to the downside here in a bearish formation out of this lateral trading range. Now, this is not a breakdown just yet. All we've done really is come down to interact with the lower boundary of our trend channel, which is fine. If we do start to continue lower, that would be a break of the trend channel, and then a change in trend here in overall character of the market. So the next couple of days here are going to be very, very important to see whether we hang on to this trend channel or not. We had a pretty good break to the downside today, so we could have a measuring day tomorrow, especially since it's the in-between day. Today was the ADP number, Wednesday. Tomorrow's the in-between day, and then Friday's the non-farm payroll number. So tomorrow could be very well be more of a measuring day where we just kind of go back and forth a little bit. So we have to see whether we can give it 2 days, which I think we should. Give it 2 days here to see if we follow through, and probably even 3 days, which would include Monday's trade after the market digests the non-farm number, decides what they want to do, and kind of set up the next week of trading. So this is going to be really important here for the next 72 hours of trading. Here's the SOX versus the NDX. This is a weekly time frame. We've gotten back up near this breakdown level that we've been tracking and started trading laterally, so that's fine. But we have to see whether we can kind of just take this energy and break out above, or whether this energy is going to release to the downside, and whether this resistance is going to stay intact. So far, this resistance is staying intact here, and this little resistance, this consolidation area, is just really turning into overhead that the market was unable to pivot through and make a bullish move to the upside here. So this is definitely a very negative development overall for the NASDAQ market. All right, here's a look at the BKX versus the S&P. You can see that the BKX had some real relative weakness today. The BKX is the blue. That's fine as long as we seem to have some relative strength in the energy patch and see that rotation into those later cycle stocks, but we're really not seeing that right now. The energy patch was weak today, so this breakdown in the BKX is certainly notable. The BKX was much weaker, as you can see here on the chart, than the overall market, so this is a real negative for the broad market. The 10-day trend is slightly elevated at 1.21, but is definitely not anywhere near oversold at 1.35 or higher. So if the market wishes to continue lower, it definitely has room to do that before we record that 1.35 or greater 10-day trend oversold threshold. One of our other intermarket charts that we've been following very close is the OSX versus the oil futures themselves. We said that we thought this move in the oil futures was kind of suspect because we didn't have the positive performance to go along with it from the OSX, which are the oil services stocks, the oil producing stocks. So what we had here is we had a breakdown in the OSX, which broke below this previous low. And what happened here, the oil futures had the worst trading day of the year so far. They absolutely collapsed today, really being dragged down by the underperformance of the underlying stocks. This is a real key breakdown here in the OSX. We'll take a look at that a little bit later. And it's definitely something that you want to have on the watch list for the next couple of days. Okay, now here's what I think is probably the most important chart, and definitely the one that I will not argue with, no matter what else is going on, what other technicals may be presenting themselves. This is the one chart I will not argue with. This is a cumulative advanced decline line. On the bottom here is the NASDAQ side. This is the NDX side. You can see that we've really started to roll to the downside here. We're just in the area of this trend line here that's been supporting price, which is fine. But what we don't want to see, if you're a bull, is you don't want to see this break to the downside and follow through. If this breaks to the downside and follows through, the overall market is doomed. We're going lower. Now, I will not equivocate on that. If this breaks, the market's going lower. Usually this leads the market. We had said in the last couple of sessions, we had that update 2 days ago, and we had higher prices in the market, but the overall advanced declines were negative on the day. That was kind of like the little warning sign. We had a real drubbing today in the overall readings from the advanced declines. We're minus 1,300 issues on New York, and pretty much a like amount on the NASDAQ side. So we really are starting to see some negative internal market activity. So this is really the one thing you want to focus on. Tomorrow, if we do bounce, we want to see some real positive advanced declines to really show that the bulls are really still there. They're not taking a powder. If we have kind of a bounce tomorrow and the advanced declines are kind of flat and not really very positive, then that's probably going to be a sign that we're ultimately going to wind up heading lower here. So this is really key. If you look to the top here, this is the New York Stock Exchange side, which we use for the broad market. We're right in the area of that trend line. Okay, just a trend line touch is not a trend line break. You have to follow through below it. If we do follow through below it, it's almost guaranteed that the overall equity prices will follow suit. So this is the most important chart right now to follow, and this is one that we're going to be watching every day. All right, here's our multi-sector daily chart. This is the XAU, the SOX, the BTK, and the BKX. What you saw here is you saw selling across the board. We saw the growth-oriented indexes all lower. The SOX, the BTK, and the BKX were all lower. The SOX today, this is the blue line, was extremely weak, and the BKX was also weak. Unfortunately, the XAU was also fairly negative, which really just means that people were really just pulling bids everywhere. Really, the only thing that really did well today were the treasuries and the truly super defensive havens of capital. So this is really kind of extremely negative day. There wasn't really a rotational sell-off where I'm going to take a little out of the Google, I'm going to take a little off of IBM, I'm going to take a little out of JP Morgan, which weighs on those averages. But I'm going to put a little money to work back in the XAU. I'm going to buy a little Royal Gold. I'm going to buy some Newmont Mining. Didn't see that. Today was really just everybody pulling their horns in, which is definitely a cause for concern for the overall bulls in the market. That doesn't mean that the XAU should be crossed off the list as a potential long. What usually happens is when the decline starts initially, they hit everything. Bids evaporate across all asset classes except for the truly defensive things like the treasuries and whatnot. This is really potentially a very negative development that really could mean that we're really setting up for more of a down leg down here. Keep an eye on this. If the XAU just refuses to really perform, that's definitely going to be a sign that we're headed for trouble. Real quickly, here's a look at the put-call ratio, the total put-call ratio. It is elevated, but we did not get anywhere near a climactic reading. So for now, there's still potential for lower prices before we get the safety net of that climactic reading below the market. So for now, we still have some gas in the tank to the downside if the market so chooses. All right, now here's a look at our major sectors, sorted from best to worst. I think the one thing that should really jump out at you is that we had nothing that was green today. Everything was red today. The more defensive groups were really the better performers. The pharmaceuticals performed okay relative to the overall market. The utilities performed okay relative to the overall market. Transports and on down were really much weaker than the market. Oil was weak. The BKX was much weaker than the market, twice as weak as the overall market. The airline index got hammered. Housing got hit, and the gold and silver index was the weakest of all of them, the XAU. So really just kind of a broad-based selling of the averages overall, and really just a truly dismal day. All right, so here's a look at the BTK. The BTK definitely was a poor performance today, but it was better than some of the others. Note that we've got a fairly bearish candle down here. We didn't really take out yesterday's high. We essentially just matched it. But this is almost an outside day down. Not classic textbook outside day down, but definitely one that is cause for concern. Keep in mind here that we settled right down at the 10 EMA, which is no surprise. 10 EMA is a very, very key short-term indicator and short-term level. We're down back below this 5/8 level. This 4/8 level here at 1750 is going to be really, really important. Wouldn't be surprised to see a measuring day, but who knows? The one thing I will point out is that we did have the trend termination candle in place. We had one day up. Here's candle 1. Candle 2 was up. Then candle 3 made a new high, but closed down on the day. And then yesterday we closed up. That's the trend termination candle. That's where you look for the trend to exhaust itself and be done. What do we do today? We opened up and closed at the low, engulfing the previous up day. That's exactly what this 4-day indicator is supposed to do. We played Biogen today, BIIB on the short side, and made nice money there. Off this pattern, Biogen was very, very extended to the upside. We took that short fairly early. Took a little while to get going, but as traders realized that this day was going nowhere but down, they really started taking profits, and that could definitely follow through over the next couple of days. These BTK stocks are very extended, and people have big profits in them. So definitely be ready for some short setups here. Keep these on the list. SOX was weaker than the overall market. We broke down below the static trend line here. We're now below the 10 and the 50 DMA. The next real level is going to be this prior low, 413. If we lose 413, next level that comes into play is the 6/8 level at 406. Keep in mind we do have this secret exhaustion in play. We've got a lower high and now a lower low. MACD has dunked down right to the zero line. If we break down below the zero line, that is where you should expect some downward momentum to develop. BKX very negative as well today, twice as weak as the overall broad market. We lost the 8/8 level. We've lost the 50, at least on a closing basis today, that we haven't qualified and follow through to the downside yet. If we do continue to the downside here, we've got a double level here at about 53 1/4. That's going to be the 6/8 Murray math level, and also the static trend line. That's the slightly higher red trend line here off of this 9-bar run to the upside here. The MACD is approaching the 0 line as well, so keep an eye on that. The OSX today was extremely weak. We basically come down to this breakdown level at 234, 235. If we start to lose 234, this is going to be one of those areas where you're going to start to put the static trend line in place. Static trend line is coming in about 229.5. Definitely keep an eye on the OSX for more weakness. There's a lot of energy in this pattern since it's going sideways for so long. XAU closed at a new low. We're right in the area of the 0/8 line at 125. Haven't officially lost it yet until we qualify and follow through to the downside, but we're still relatively early in the overall count here for the Seeker. We're only 10 days down, so another 3 days down before we get to that exhaustion warning could actually do a lot of damage. All right, folks, that's going to be it for today. As always, thanks for listening. This has been Rich Derrick for Tradesight.